Okay, good morning, folks, and welcome to Stock Charts this morning. This is where we review the pre-market activity, the events that occurred overnight, as well as the economic data that's coming out today. Today we get durable goods, and that's a big number because that will dictate whether or not the weakness we saw yesterday in new home sales has followed through into the consumer appliance arena, such as your refrigerators, washing machines, etc. We also have consumer confidence coming out 10 a.m. Eastern Standard Time, and we have our new Fed chair up on Capitol Hill giving testimony. The question is, will he throw the markets a life preserver? What do I mean by that? I'm going to keep it really, really simple. The EU, the United States, and Japan in particular are insolvent. The market has told us already through its price action earlier in February that if we continue to see rising rates, in all probability, this market is going a lot lower. And in Washington, D.C., the stock market is the economy. Have no doubt about it. People get their 401k statements and they vote on their 401k statement. They keep it fairly simple. So if you take a look at this chart here of the US dollar, which has been holding up fairly resilient, even though it's been in a bear market for the past year, and last year was its first down year in many, what the dollar is showing you right here through this consolidation and these ever-tightening Bollinger Bands is that it's expecting a Federal Reserve that is going to be aggressive. It's going to be hawkish by raising rates and rolling off debt off their balance sheet. But when you take a look at the S&P 500, which has rallied sharply off of its lows and appears to be stair-stepping higher this morning, well, those guys there in the stock market, they're saying, no. What the Federal Reserve is going to do is, unlike what the currency market is saying, they're going to be accommodative. They're not going to raise rates as aggressively. And while we're down this morning, it's still early. We have a lot of news to come out this morning. We could easily bounce back. So it's really a tale of not two markets per se, but a tale of two solutions to our fiscal and monetary policy, and neither one are good. And in the end, the logical outcome is that they will have to inflate our way out of the current fiscal situation. And the way to go is by buying gold, which is consolidating. We're off the lows, but lethargic right now. No breakout yet. Nothing exciting happening here yet. Oil, we're down in the morning, but we're stair-stepping higher. Nat gas, a beautiful consolidation here. If we get a breakout, we may be buyers of nat gas today ourselves. We'll be looking at a name like UGAZ. That's for the trader that embraces volatility. If we get a breakout, you want to get long of nat gas, look at something like UNG to give you exposure. But nat gas is looking good, but only on a breakout. Let's leave off with the NASDAQ 100. We're down in the morning, but this is not a major breakdown. We could easily rally back. We are moving higher, higher lows, higher highs. But as we near, and this goes for the S&P 500 as well, as we near the prior highs, you're going to see sellers move in. Why is that? It's called overhead supply. Buyers back here who sat through this sell-off, they want their money back. It's psychology. It's understandable. But I think that if we get dovish testimony out of Fed Chair Powell today, and if we see economic data come out weak, you're going to see a rally in the U.S. stock market. It sounds counterintuitive, but that's just the way it works, folks. I went over this last night with members on Market Wrap. So if you're not a member, sign up, check it out. If you're a member and you haven't watched it yet, please go over. It's posted in the members area. We talk about what to expect out of the Federal Reserve and out of the markets if we get weak economic data today and tomorrow. Tomorrow we get GDP numbers. Let's get to member stock chart requests. This is where we review the symbols that our members submit for me to review. All right, the first chart up, weekly chart, Domino's Pizza, DPZ, a great chart. And you may be saying, Bob, we're down on the week. What are you talking about? The reason why it's a great chart is because it's outperforming the S&P 500. And we broke out last week. The problem with last week's price action is that while I believe we're at an all-time high here. Yep, we're at an all-time high. So the problem is that you saw sellers move in, profit takers move in. And so this week you have a little bit of lethargic traders not willing to step up to the plate yet. I think that they will. I think that these shares are moving higher. When would I buy or open up a position on DPZ? On a pullback and a retest of this support level, which I think is very probable at the, let's call it 222 level. And then on a breakout above 236 and a close on a weekly basis, I'd be a buyer of DPZ. I like the chart. I think we're moving a lot higher. And going back to that quarterly chart for a moment, I mean, there is 1 month left to go in this quarter, right? But when you take a look at this setup here, this is a classic bull flag setup. We are breaking out, 1 month left to go. It doesn't necessarily mean we're going to close above this resistance level this time next month, but as it stands right now, it's looking pretty darn good. So DPZ is looking very sharp, a little bit overbought on a quarterly basis, RSI, but price and volume trump all. Daily chart, yeah, daily chart, we're seeing some resistance above here. Expect a pullback, probably back down here to 222. Now, if we close down below 222, all bets are off. We just sit there, watch, and wait because the stock may come under pressure, and a close below 222.50 will be a bull trap, meaning a failed breakout. And you don't want any part of that until we start rallying back. So be very, very careful. Wait for the pullback at around the 222 level, then step up to the plate with a stop right below that level. Berkshire Hathaway, weekly chart, a bullish key reversal and a rally back out of a resistance level, which is at the 205 level, thereabouts. So the question is, do we get long? Daily chart, we broke out of a triangle formation. I wouldn't chase the shares here. We have too much resistance above. I mean, you only have $7 between where we closed out yesterday and all-time highs. That's not a lot. And resistance is at 212.50. I would wait for either A, breakout, or B, a pullback and a retest of support with a stop right below this support level here. This rally came, I believe, on earnings. Volume, outstanding. If you're going to buy these shares come hell or high water, scratch the itch, fine. Keep your buy very, very small with a stop right below yesterday's lows. PepsiCo, weekly chart. All right, so thus far this week, after flashing bottoming tails for the 3 prior weeks, what are bottoming tails? Those are the wicks or shadows, call them cupcakes, underneath the candlesticks. Doesn't matter what you call them. Just understand what they represent. And what they represent are buyers, support below. And so far this week, we have a new weekly high, and we're back above support. I would wait for these shares to see whether or not they close out this week above resistance at the 110 level, daily chart. Yeah, I don't see any reason to go running in and chasing these shares. We broke out of a resistance level. We may get a short squeeze higher here. There's not many shorts in this name. I think we'll probably pull back and retest this support level here. And I would use a stop right below 107.94. Volume is really good. I will say that. For a market with mixed volume, PepsiCo is showing some good volume. Cato's Defense and Security Solutions. So far this month, we have a bullish reversal month. Stokes, RSI hooking up. Good stuff. Daily chart. Oof. Hollow-filled reversal day yesterday. So I would not be a buyer of the shares until we pulled back and retested support and or broke out above 12.92. So right now, these shares are a watch. Volume was good yesterday, but take note of the intraday volume. I haven't taken a look yet, but I know pretty much what it looks like. You're going to see some down volume bars in there. Here it was yesterday. Big gap up higher. Sellers moved in, took it down. We had some good volume at the close. So if you wanted to speculate here, and I wouldn't necessarily do this on a stock that's consolidating, but if you're dead set, you need an action plan or a game plan, buy the shares on a rally up and through 12.40, using a stop, back to the daily chart, using a stop. If you're a swing trader, right below 12.12. If you're a day trader, obviously you're going to want to stay a lot tighter than that. The ITB, the iShares U.S. Home Construction. You know, when I took a look at this on my list of stocks to go over for members, I expected a chart that was pretty ugly. And on a weekly basis, it is pretty ugly. We had horrible new home sales reported yesterday, driven by inflation, rising costs of new homes, and rising inflation rates. Now, in the face of that news, what did the ITB do? Let's go to a daily chart. Closed up. Now, names like KB Homes, they were down while Toll Brothers was up. I think this is a regional story. Net, though, on the day, the ITB was up on the day. Now, we didn't get a breakout. We're very close to one, though. If you decide to buy these shares, I would use a really tight stop-loss order, because if rates rise, this sector is going to suffer dramatically. I think the bet is that we are going to be thrown a life preserver by the Federal Reserve, and that could come as soon as today, at least an interpretation. I don't expect Jay Powell to go in front of the Congress and say no more rate hikes this year. It just comes down to a couple of subtle sentences that could shift the market. So yesterday we closed up. We have a higher low versus the lows earlier in the month. Watch for a breakout because we do not have a higher high yet. Technically, the downtrend is still in place. It is not broken. And how do you know that we've been thrown a life preserver? You're not sitting in front of C-SPAN watching the Fed chair speak to Congress, or you don't believe the headlines on CNBC, which is a very smart move. All you need to do is watch the dollar. If the dollar breaks support, if gold rallies, you know we've been throwing a life preserver. And if we rally up and through 41.43 on the ITB, it's time to get long of the home builders. And that's it for this morning, folks. Everybody have a profitable trading day. Members, I will talk to you in the forum later on today. Everybody be well.